Welcome to the bizval podcast. At bizval, we are passionate about empowering entrepreneurs the world over to understand and unlock the value in their business. We work with advisors and entrepreneurs to demystify the value creation process when building a business. At bizval, we know how tough it is to grow and run a business, which is exactly why we've made valuations simple to understand, accurate, and affordable. Our unique blend of tech and touch ensures that you always receive the best service, authentic human engagement, and data-led insights to ensure that you build a business that provides you with freedom and choice. In the bizval podcast, we showcase stories of real entrepreneurs and advisors, sharing lessons and inspiration from their journeys to make your journey just that little bit easier. And today's guest is a CA, he's an FMVA, all these acronyms. He's currently head of valuations at PSG Capital, or should I say PSG Capital, if I move slightly more north. But he's one of the most respected corporate finance associates in South Africa. James Moody, welcome to the bizval podcast.
Thank you for having me, Graham. Appreciate your time. I know you're a busy man, so thanks for having me.
Fantastic. James, I think, just for our listeners today, we're going to follow our usual sort of recipe, get to know you a bit about your upbringing, your sort of path to corporate finance, a little about your time at PSG, and then we're going to have a bit of a discussion just around valuations in general. And, I'm quite excited about today's chat because often we're interviewing founders and entrepreneurs, and it's not often that we get to chat to fellow professionals in the industry. And part of our values at bizval is around lifting the entire industry. It's not about one valuation firm being better than the next. It's actually a question of how do we make sure that valuations are done credibly across the board, locally and internationally. So, James, let's start at the beginning. Okay. I've had a few interviews in the last little while with people who were born in Natal or in Durban specifically. So maybe there's something in the water there. But you grew up in Durban, born in Durban, went to Westville Boys and primary and high school. Let's just start about your early life. What was it like growing up in Durban, and what were some of your early influences?
Sure. So look, Durban, I think, is a relatively relaxed place in comparison to the likes of Joburg. And if we had to go abroad, a relatively small-ish town vibe, but I think incredibly down to earth and a really good sense of community. So I thoroughly enjoyed my upbringing in Durban. I met some incredible people. I've made some lifelong friends along the way. And I think the community of people within Durban itself are really easy to engage with, and you can make friends very easily. So I thoroughly enjoyed my upbringing there, and after that moved on to various places within South Africa and abroad. But it was a great upbringing.
Yeah, I think we see a lot of that. People who grow up in, let's call it, smaller towns or smaller cities. This ability to develop relationships and human connections. It's not all about just building wealth, right? And I think it grounds you. I grew up in Port Elizabeth, which for international listeners is also a sort of small coastal city like Durban. So I can relate to a lot of that. But tell us a little bit about your upbringing. You went to Westville Boys, which was a proper old, let's call it traditional boys' high school. What were some of your hobbies and your interests growing up?
Absolutely. So I've grown up in a family that's relatively sporty. So we always believed in being outdoors. That was the best way to kind of keep fit and healthy and not spend too much time in front of the TV. What came with that was always mom and dad trying to instill an element of balance. So making sure that we were outdoors and not spending too much time in front of the TV, but then also, in addition to being on the sporting field, making sure academically you were applying yourself relatively diligently. So, the upbringing was good. The experience and exposure that I got at Westville Boys, which is somewhere north of 1,000 scholars. So, from a competitiveness perspective, both on the sporting field and then also in the classroom was of the highest standard. So I feel like I got a really good exposure and quality education that's really enabled me to grasp kind of key core fundamental principles that have really served me
Mm.
well in my professional career to date.
And what are some of those things that have kind of stayed with you as you've kind of, moved into the professional world? Is it things like, camaraderie and teamwork and even competitiveness? What for you have been the sort of big things that you've carried with you?
Sure. So I think relationships is a very important one. So you often hear the phrase, it's not what you know, it's who you know. And I think there is an element of truth to that. So just trying to
Mm,
be a good human being and keeping in touch from a relationship perspective. So to the extent that you've got a good friends base, it's continuing those relationships and keeping up to date with them, checking in. So you always, in inverted commas, keeping the relationships warm. So that really does help
mm,
a hell of a lot in terms of if you need to reach out to somebody, and this is not necessarily just a friend, this is anybody. If you need to reach out to them, you have engaged with them consistently and they can see that you have put in the effort historically. That really does make a big difference in building your kind of community from
mm,
a social and also entrepreneurial and work perspective, such that with the click of a button on your phone, you can phone X, Y, and Z people to assist you.
mm,
Because the reality is that we each choose our individual career paths, and we
mm.
are experts somewhat in those respective paths, but we aren't experts in everything. So
Yeah.
it's incredibly important to build an ecosystem around you of people that can complement all of that. And I mean, even outside of that, it's building a happy life and having a good friendship circle.
Mhm. Yeah, fantastic. And as I say, that network, we often talk about the old school network, but I mean it matters. Whether you went to a top school or small school doesn't really change the fact that you've got people you've grown up with, you've got to know, and being able to kind of have that familiarity in the process of reaching out is super important. So let's move on a little bit. You decided to become a chartered accountant. Um, you always joke about this. I'm a chartered accountant myself, but nobody's really born wanting to be a chartered accountant. Probably start somewhere with firemen and policemen, and somewhere along the way, these sort of careers come about. But what pulled you towards sort of accounting? Have you always been an analytical person, problem solver? What drew you towards studying chartered accounting?
So, Graham, I've come from a family of CAs. So my father's a CA, my uncle's a CA, my grandfather's a CA. So there's a pretty strong finance kind of vein or background within my family. So I'm probably one of the closer to wanting to be a CA from the outset of all the people that you've
Okay, so you
interviewed.
you 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 were born into like Max Verstappen was born as a racing driver. You were basically born as a CA.
Something like that. Interestingly, my first career thought was I wanted to be an airline pilot because I love traveling. But travel
Yeah.
and experience is a big part of my life. And I think that led me to think that that would be a great career, but that has its own
Mm,
cons in the sense of being away from family for significant periods of time. So I think more realistically, outside of being on the sporting field, it was being involved in some elements of finance, kind of corporate business and the like. That really does resonate with me, and I feel like I can add the most value in that.
And I guess, as I've spoken to a lot of, founders and entrepreneurs, and one of the things that often comes through is that they were those that were born into sort of entrepreneurial families. What gets spoken about at the dinner table often shapes and influences you. So I'm sure there were a lot of family
Sure.
time business conversations and all of those sorts of things. But you had that as a sort of a backdrop environment which enabled that. But while you were studying, what what did you learn in your studies beyond the textbook? Beyond the IFRS, beyond all the accounting stuff. What were the standout things from your university days?
Sure. So, Graham, there were a number of things, and I won't go through all of them, but the few that stick out, and the first being resilience. So, I think in life, lands on your table, your plate. Nothing comes for free. You've got to work
Mm,
for what you have. And varsity really created or enabled that resilience factor. Varsity wasn't easy. It's not easy for most people, but if you're consistent and you persevere and put in
mm,
that effort when nobody's watching, the long, hard hours when other people are perhaps out partying and the like. I think that over the long term, that really, really does pay off, and we see it in many professions. If you look at sporting professions, um, the professional athletes of likes of Michael Phelps and so forth, putting
mm,
in exceptional amount of hours when nobody's watching, and it's those hours that
mm.
pay off in the background.
It's that iceberg principle, nobody sees it, but it's all that hard work that goes in. And for
Agreed.
those that have done their chartered accounting exams and that, I think you all know what James is talking about, right?
Yeah,
So
absolutely.
let's move on a bit. You finish your studies, you're doing your articles at Deloitte in Johannesburg, and let's talk a bit about that articles experience. What did you learn from that? You've moved from Durban now to the big city, I guess. So tell me a little bit about those early days in, let's call it your first job, so to speak.
Yeah, so the big smoke, as they call it colloquially, Johannesburg was a step up in the sense of the pace or the environment compared to
Mm,
Durban. But in terms of the actual articles experience and at Deloitte, and I had a fantastic articles experience where I got a really good exposure to a broad array of clients, but also working really hard, but also equally playing hard and having the ability to interact and socialize with people of
mm,
varying paths or skill sets, but also levels of seniority. So within Deloitte, you obviously engage with your fellow article clerks, either first, second, or third year, but then also you have access to the directors, the partners, and so on and so forth, people that have been there and done that. So really
mm,
valuable to be able to interact, pick their brain, hear their life experience, see what they've done, and learn potentially what not to do as well, which is an incredibly powerful thing that I saw in the various audits that I was involved in. You see a lot of really great companies and businesses and what you should do to achieve a similar type of success, but also it's not only that you should take away, it's the learnings of, okay, you should probably not do this, or these are the principles that you could do better to manage your business, manage the people, manage the stakeholders. I think the
mm.
exposure that I got to a broad array of clients and seeing how things were conducted in the business was incredibly valuable.
Yeah, I mean, I think people often underestimate that. A lot of people go into articles with the notion of they're going to study that, going to learn the technical parts of auditing, but the real value is far deeper than that. I mean, not many 21 or 22-year olds have the ability to walk up to a CFO at a listed business and have a conversation with them, which,
100%.
those are kind of advantages, I guess, which you granted through the job. Um, it's about building people connections, something that you spoke about that I can relate to as well. Moving from Port Elizabeth to Johannesburg to do my articles, I had a similar experience. I think of our cohort of, I was at PwC, but I mean, over 100 article clerks, I think 60 of them were from outside of Johannesburg. So, a lot of people are in the same boat. You're building a career, you're building a life away from family, and those are the sort of softer parts that really, I think, grow you as an individual and get you to see the world is a bigger place than a small coastal town in South Africa, right?
Absolutely.
Yeah. So James, you then did an interesting detour, like many article clerks at the end of at the end of your articles, you had the opportunities to go to London on a JIT program. You, like many, go on the program and they never come back. You did a short stint in London and then came back to South Africa and joined a compliance business and moving out of the sort of audit space. Um, but tell us a little bit about that part of your journey. One, going to London, what was that like? And then why did you come back, change tack a little bit, and then sort of resettle in South Africa, so to speak? Was it a wife? Was it a love interest, or was it just you want to come back and make a difference in South Africa?
Yeah, so, some good questions, Graham. So, in terms of my experience in London, it was absolutely incredible, and I would encourage any chartered accountants who have just finished their articles or are close to finishing their articles to look at something like that. It gives you a worldly experience that you can't necessarily get the full grapple of it here in South Africa, being a relatively small market in relation to what's out there
Mm,
globally. But and if I had to just summarize the biggest takeaway that I got from my exposure and experience in London is how good the South African CAs are relative to, let's say, CAs or accountants in London or the UK, but more broadly globally. So I would say, are heads and shoulders above the rest, and it's that consistency that I was talking to earlier, in the sense of, in school you probably have maths, and potentially if you're looking to do some form of business degree, you do accounting as well. Then you study, when you go to your tertiary education, you study accounting or business and the like, and that gives you a further understanding from a technical perspective, and also some exposure to how business works. And then in your articles, you actually put that knowledge base that
mm,
you've learned into practice. You interact with these senior people, CEOs, CFOs. So you really are a very well-rounded individual, and just the ability to apply your technical expertise that you've learned textbook, and then also that application in the professional environment, is absolutely invaluable. And I think it was really easy to see in terms of how South African CAs were able to conduct themselves on these secondment programs and the various audits, being kind of heads and shoulders above the others who are of similar age, but just haven't had this kind of thoroughbred upbringing.
I think it's quite a confidence boost as well, because you kind of realize that actually you can compete on the world stage, and not just compete but excel on the world stage. So you do your stint in London, back to South Africa. Tell us a little bit about that.
Yeah. Yeah, so Graham, I had a decision to make before, and I was lucky enough to go on secondment with my girlfriend at the time, who's now my wife. So we managed to go together. She was also at Deloitte, and we had a decision to make, in the sense of, do we stay abroad like so many have, or do we come
Mm,
back and start things out in South Africa? And I think the quality of life aspect in South Africa is second to none, in terms of what we have access to, the weather, the ability to do entrepreneurial things. So we decided that the best route for us was to come back post doing the secondment in London. And I think
mm,
the more conservative side of me wanted to have a job in place when I came back, and hence the slight detour in terms of or slightly off the beaten track in terms of going to TechX, which in retrospect was a fantastic part of my
mm,
journey, getting to learn about a different industry, interacting with different people, seeing a lot of kind of entrepreneurial
mm.
flair, and just an understanding of kind of cross-border transactions and moving of goods, etc. So that was a really good part of the journey as well.
I mean, I think that's fascinating because, as you say, you move out of the technical space. And sometimes, at the time, you might be, whoa, like I'm out of my comfort zone. But looking back in hindsight, I'm sure there's a lot of things you learned through that as well. And I can also, in my career, there's many parallels where, on paper, it didn't end up being a good career move, but in hindsight, I learned so much through those sort of, let's call it, steps off the sort of the garden path into the little narrow alleyways and what have you,
Yeah,
which were
absolutely.
really helpful. Yeah. Okay. And then from there, you joined Mazars in the corporate finance team, and I guess that's where your sort of, let's call it, your valuation and corporate finance career really starts. So let's just talk a little bit about that. Your time at Mazars. Just talk about corporate finance. I mean, we corporate finance professionals, so we know it. But for some of our listeners, sometimes I think corporate finance is like this word, like M&A. What does it actually mean?
Exactly.
So, talk a little bit about your time at Mazars. What were some of your experiences there, and why did you move into the corporate finance space?
Sure. My experience at Mazars was as you said, and not putting words in your mouth, but basically where I cut my teeth from a corporate finance industry and understanding perspective. So putting into place all of the previous learnings and interactions with various people and really now getting into the nitty-gritty of valuations,
Mm,
due diligences, looking at transactions, looking at structuring. So I learned an enormous amount at Mazars and was really where I understood and made the decision that corporate finance and being in the broader industry was something that I was really passionate about and something that or the industry in which I wanted to further my career. So it was a really important stepping stone for me. I made a lot of friends at Mazars, business connections, and it really was a good stepping stone for where I am in my career now. And to your point in terms of corporate finance, it is a word that's thrown around by many people. And that, interestingly enough, in conversations that I've had with various people, if you had to ask them what does corporate finance mean? What is corporate finance? Not many of them can actually
mm,
give you an answer as to what it entails. So perhaps it's useful to educate the listeners in the sense of its initiatives around corporates, and that can be fundraising, raising of capital, buying and selling of businesses. It's all kind of corporate
mm.
activity surrounding companies, which are largely essential services to enable growth and continuation, or if you need to pivot, the ability to raise funding or understand the value of your business, and so on and so forth.
And I think part of that, I think what's really intriguing about that is you really need to understand the nuts and bolts, basically the heartbeat of a business, how it operates, what the risks are, all of those sorts of things. So I think the words corporate finance almost glosses over that. You really get to see the engine
Yeah.
room of businesses and also the people that are involved in running those businesses. So I think that's what's really exciting, certainly at this stage of your career, back in 2020, um, COVID on its way and all of those sorts of things, I suppose, some challenges. But you also kind of then sort of started to lean towards valuations, a special interest in that. What drew you towards that, James?
Graham, my or one of my core principles as James is to add value to people or transactions. So I like to have a purpose and the ability to help people and to create something better than it was before is a key driving force or factor for me. So understanding the value of a business and the power that
Mm,
that gives you to then go forward and obtain additional debt financing or go into an M&A transaction or a partnership, that can add a huge amount of power and value to a particular person. So I'm that's a core principle or key for me. But in addition, from a valuation perspective, there's so much in the valuation world and industry. There are prescribed ways or standards that people generally follow to value businesses, but you've got to assess each case differently and what is the most appropriate way to look at things to determine an appropriate way to value the business. So there's no single transaction or valuation that's ever the same. So for me, it keeps things interesting. You always see nuances. You've always got to think about different ways that to position things.
mhm.
So it is really exciting on a day-to-day basis for me.
And we're going to come back to a little bit of that in a second. But I want to talk a little bit about where you're at now. So, there was another change that happened. So you served your time at Mazars, great learnings, and then you joined PSG Capital and currently head of the valuations team. Then I guess that also involved a move from Johannesburg down to the Western Cape. But for those listeners who don't know who PSG Capital is, can you just quickly paint a picture of who you guys are and what you do?
Sure.
If you're listening in South
So
Africa, you probably know the name, but if you're outside of South Africa, hopefully you know the name too.
sure. So I think correct, Graham. Most South African participants would have heard the name PSG or PSG Group, which was previously a listed company up until about 4 years ago when it unbundled a whole bunch of its assets, including the likes of Capitec and a few other very successful stories, and has now moved into the unlisted environment. And PSG Capital sits as a subsidiary of the PSG Group. And essentially, what PSG Capital is a fully fledged corporate finance house. So we compete with the likes of the banks, other investment banks within South Africa. But essentially, we offer the full suite of corporate finance services. So that's buy side and sell side M&A, both from a private and listed perspective, listings of businesses, delistings of businesses, valuations, financial modeling, structuring, PE transactions. So essentially, everything that could encounter in some form of business transaction or company transaction, we can assist with. Our team is comprised of CAs, CFAs, the more finance-related individuals, but then also with that, we've got a whole bunch of lawyers as well, corporate and commercial and M&A lawyers. So that combination of that finance hat coupled with the legal hat allows us to really run transactions from nose to toe, and in my opinion, sets us apart from a lot of our competitors in that we have the ability to run deals start to finish without bringing in too many specialists. There are, of course, situations where it's important to bring in specialists, and you would know, Graham, specialists in relation to tax or specialists in relation to certain BE laws and the like. But we've built up this ecosystem and base of people around us such that we can call on and draw on those individuals as and when we need.
I love that. And you know, I'm going to come back to, I'm going to change, you go off piece a little bit here, come back to the technical parts of valuation in a second. But yeah, I think it's appropriate. Yeah, is one of the things that's kind of has stood out for me, both, you know, in knowing who PSG is and preparing for this podcast, is that the PSG values page actually, you know, when we talk about values, not valuation, but values, you know, when you're doing deals and playing in this space, a lot of it is about trust. You're dealing with people. Yes, there's numbers that underpin that. And when I look at the PSG values page, it's not just marketing fluff. It looks as though it really means something. And you know, the people that I've engaged, like yourself and other people in the team, they seem to live out those values. So can you just talk for a second how important that is to you, and also as a team, why that's so important? Maybe just highlight a couple of the big values that sort of stick out for you, and why that's so important in the space.
Graham, it's fundamentally important. It draws on what I said initially in terms of I want to create value, and in doing that, you've got to have an ecosystem of people around you, and you've got to build these things up over time. So the trust element and the building of the relationships, that's coupled or interlinked with good communication, and that really builds over a period of time such that people know that you can be relied on. They can phone you or they can send you a message, and even if you don't necessarily respond immediately, you will get back to them. And it's this inherent build-up of trust where this person has this track record of doing this thing consistently, which has really resonated with me from a kind of PSG value set. It's building up that trust. You are and I would say we are more on the boutique side than the massive corporate side. We've got a team of between 20 and 25 professionals split between Stellenbosch and Johannesburg. But we really make it our mission or goal to understand the client and build the relationship such that we really know the ins and outs of the client's business, the client's needs, etc., such that even if we don't do a deal for them or we don't do a valuation for them at the outset, we've built up this credibility and knowledge of what they're looking for, such that when an opportunity does come across the desk or arise, we can, it's top of mind. It's readily available to approach them and say, look, we understand what you guys do. You've mentioned this is what you've been looking for. We believe we found this for you, and this is why. So it's that sustained or continuous effort over a period of time that will ultimately bear fruits and create value for all parties involved.
Yeah, and I think that's where there's a strong alignment in terms of why we've connected. You know, I think one of our values is we we really want to empower the client to make a better decision. And it's all around making sure that the client gets the best outcome for them. It might be a sale, it might not be a sale. Ultimately, it's understanding their needs, being passionate about their business and listening to them. And unfortunately, there's a lot of professional service providers out there. That's kind of an afterthought. They're doing a compliance tick box, and I'm not knocking. There's definitely space for that, but I think that's what sets you guys apart. Is you really try to understand the client and make sure they make the best decision for themselves. And sometimes that might mean walking away from a deal or not doing the deal. So I think that's super important. And the rest, I can breeze through some of them. Best in class people. That's almost like a ticket to the game. You're going to hire great people. Professionalism, dedication, integrity, and all those things. I think they are so powerful. And when they're not there, it's quite obvious. When it's there, sometimes people almost take it for granted because that's what the expectation is, right?
Yeah.
So, James, I want to move on a little bit about valuation, and I'm keeping half an hour on the time. We've got about another 15 minutes left. So let's talk a little bit about valuation. Okay. And I think a lot of our listeners know around this, but in plain language to a business owner listening into this, what is a valuation and why is it important? What's it actually telling a business owner or a client at the end of the day?
Sure. So there's, without answering your question directly first, there are many ways to value a business, but ultimately
Mm.
you want to get an understanding from an internal perspective, but also an external perspective, what your business is worth. So and this is also where I think some users potentially get it wrong, in that they focus on a singular metric. So, for example, EBITDA. Most people know about EBITDA, and they'll fixate over that number. However, you can't look at a singular metric in isolation, and also
Mm.
historic performance or historic results achieved is not necessarily going to be continued on, or is not a determinant of what could be in the future. So you need to look at a number of metrics and pull everything together and try and triangulate what is a reasonable outcome in terms of valuation. And the key for investors is cash. So taking away from the accounting side of it and accounting profitability and the like, what could this investment generate for a particular investor or business owner from a cash perspective, which would enable the payment of dividends, and then further down the line, the sale of the business, and a willing buyer, willing seller argument, where what will a willing buyer and willing seller transact at with the appropriate knowledge base to do a transaction. That's ultimately what a fair value is, but that is premised off of what cash generation this business can generate in the future, not historically what's happened.
Absolutely. And yeah, I guess you bring it back to first principles. Fundamentally, you're trying to simulate what a real world buyer and seller would pay for a business. So in listed companies, it's reasonably easy. You've got a market. It's a London Stock Exchange or the New York Stock Exchange or the JSE, right? Where those transactions are happening daily. And you've got investors who are doing their own valuations, and you've got buyers and sellers kind of thinking, is it going to go up, is it going to down? And it's projecting the future, not the past. And it's no different, I guess, in the world we operate in, which is usually private companies where that sort of information's not readily available. And I think the point you touched on there is not just looking at it through one lens. I'll use a very simple analogy. If you're trying to date someone, just because they're smart doesn't make them a good boyfriend or girlfriend, whatever the case might be. You look at the whole package, and your role and our role as valuation professionals is to do that. Put the facts on the table, not be biased and what's the word? Monolithic in our approach to that. So, what are some of the things that you see where most owners get it wrong when they think about the value of their business?
Sure.
What are the key things that most owners get wrong?
I did touch on it briefly, and it's the singular metric lens, but
Mm.
understanding that accounting profits don't correlate necessarily with cash generation. So there needs to be an understanding that not everything in the income statement is cash. There are IFRS prescribed metrics where you need to make certain provisions and the like, which are non-cash, depreciation, so on
Mm,
and so forth. But in addition to not necessarily understanding the difference between the accrual basis of accounting, which the income statement's calculated or presented on, versus cash, it's investors that don't take account of the capital structure of the business, and that includes the capital expenditure profile that's required. So just for the
mm,
users, in terms of a very simple example, you could have a business that's generating 100 rands worth of EBITDA, which on paper looks great. However, in order to generate that EBITDA, the business has an enormous amount of debt, which
mm,
detracts or reduces the profitability, which is below the EBITDA line, which
mm,
could then result in the business making a net loss. But from an EBITDA
mm.
perspective, it's very attractive. However, you are
Yeah.
funding this growth or this business through debt, which will, in all likelihood, increase the risk profile of the business. And in addition to
Mm,
that, there could be a requirement for a lot of capex, which is not necessarily accounted for on the income statement. You've got your maintenance capex, which may be accounted for in the
mm,
income statement, but hard growth capex that's often capitalized to the balance sheet won't be reflected
mm,
in your income statement. So you've got to cater for those large cash outflows to get a full picture on what the current value of the business is and also on a continuing basis. So it's looking at
mm,
all available resources to make an informed decision and
mm,
ultimately distilling it to a very simple thought process in that if I'm going to invest in a business similar to a listed share, what could I earn from that business in the form of dividends? So, what dividend yield does it have? But then also, if I had to sell it, what could I sell it for? And
yeah.
you're not going to be able to, or it's not going to be satisfying to see paper gains or gains that don't result in cash when it's ultimately cash that you would need to fund certain things and life expenditures.
Yeah, I think you touched on some good points there. At the end of the day, it is about cash and making those appropriate adjustments, but also you can't oversimplify things, right? You actually have to go into a fair degree of detail to understand what all those movies and the bigger and more complex the business. Sometimes you kind of need to know where to look, and also that sort
And
of
that's why we're in business,
that's
right,
why we
Graham? I mean,
exist, right?
you come to a bizval, you come to a PSG, we can drill into all those key aspects and work with you as the people that understand the business the best, and work with us as investment or finance professionals to get to an outcome from an informed perspective.
Absolutely. I want to ask you three more questions, James, and then a few rapid fire questions, which we ask all our guests. But the first question is just is there any horror story that you had over the last few years? And you don't have to mention any names or anything, but where you've done a valuation or you've engaged a client and there's just been like, either complete disconnect or whatever, anything that you're willing to share.
So, Graham, thankfully, no major horror stories from a personal perspective, which I'm happy to report on. And and one of the key reasons for that is making sure that your communication is sound. So
Mm,
when there's engagement with the client and the initial meeting, and you would know this, it's setting the tone and the expectation clearly and concisely
upfront. Yeah.
upfront, and then communicating throughout the journey in the sense of this is where we are. Okay, we don't understand this. Let's workshop this, and it's keeping the client up to date and abreast of where things are progressing. So there's no
Yeah.
get to the end of your scope of work and then you've completely missed the boat. So I've heard of
Mm,
other stories, not in relation to myself or PSG Capital, thankfully, that there has been this breakdown in communication and it's resulted in a lot of hardship because of all the work that's gone in upfront and now it's essentially null and void. So thankfully,
mm.
nothing from a personal perspective on that.
Yeah, I think that's great, as you say. I mean, obviously, it's around communication, it's around expectations, around taking the client along the journey. It's not just hand over a data room, go do your valuation, and come back in 6 weeks or 3 weeks or whatever with a number. It's actually having that conversation. And if you do that well, there's less likely to be a missed expectation gap and those horror stories. So I think
Absolutely.
that's a key point. Um, the second last question is you've obviously met some interesting people over the years, and that's one of the privileges of being in the corporate finance function is you're dealing with CEOs, founders, family offices. um, and if you're comfortable mentioning a name, great. If you can't, but just a persona. Is there anybody, who or any type of person that kind of interests you the most in your conversations? Is it family founders? Is it a particular individual? I mean, maybe you can just touch on that quickly. And what do they do differently? What is it about, these people that makes them stand out?
Graham, I won't mention any specific names, but what I will say is in the industry and the position that I'm in, you get to engage with a lot of key decision makers, so CFOs and CEOs of
Mm,
mid, medium, large listed companies and also private companies. And the kind of length and breadth and wealth of knowledge from an engagement perspective is incredible, where you get to see the inner cogs and workings of how these people think about investment decisions, running a business, and in all different industries is something that not many people have access to. So I'm incredibly grateful for that exposure. And you learn, and it's each person is different, each industry is different, but you learn how to think
mm,
laterally about a certain idea or a certain transaction. So it's not taking things at face value. You have a conversation and you
mm,
think, okay, how can we optimize this situation? How can we get the best possible result? And that may not mean a straight path. It may mean moving around a little bit and thinking cleverly to get to the best outcome, which I think PSG Capital prides itself in a sense of being this boutique
mm,
type firm, but we really do think about
mm.
transactions slightly differently, and it's not just following a textbook or what has been done
Yeah.
is necessarily best. So it's not going into a specific individual or specific example, but the ability to think on your feet and think laterally is a really
Mm.
key thing that I've picked up with engaging with a lot of these high-powered leaders in public and private markets.
I think I echo that. A lot of people make a big thing about focus, but yes, focus is important. But a lot of these really successful business people and senior leaders and that have this ability, as you say, to think laterally, to think out the box, to think about all the different permutations and plan around that. The other one you didn't mention, which I'm sure you will, is often though is also this deep sense of humility. They're not doing it often because they want to be the richest person in the world. They're often doing it because they've got this deep sense of purpose. I don't know if you've experienced that, but that's certainly something I've seen when it comes to the most
Absolutely.
successful, is that there's a bigger drive than just making money. They make money because they want to make a positive difference in the world, and I'm sure a lot of the clients you work with, yeah, I like that.
Graham, that's absolutely right. I've spoken to and engaged with many people who could have retired 10 years ago, but they continue to do what they do because number one, they love what they do, but they're adding value to their broader communities and ecosystems. So they continue on, and it's not for necessarily
Yeah.
primarily monetary or personal gains. And that just a brief example, we can see that with the Curo transaction, where the Jannie Mutson Stichting or Foundation
And you say you
essentially
can mention the name because it's public news.
absolutely, yeah, and contributing to the broader South African education ecosystem and being on an absolute
Yeah.
basis the largest public donation in history. So people like that are creating a legacy, but also enhancing or significantly enhancing the lives of others. And it's not for their
Yeah.
own personal financial gain, which is really, really heartwarming to see.
Absolutely fantastic. Yeah, that's really a powerful case study, that one. Um, James, we're about to wrap up. I'm going to just flip the order of the last couple of questions around. So we always do a quick rapid fire. This is literally a minute. Okay, I'm going to ask you a question, and we just do this to a little bit of fun to get to know our guests a bit better. But there's a few questions. Yeah. So first answer that comes to mind. Are you ready?
Let's go for it.
So ocean or mountain?
Ocean.
Okay, well, you're in Somerset West, so you got both. So
I've got the best of
spoiled for
both.
choice.
Absolutely.
Coffee or tea?
Definitely coffee.
Even after 3 months in London, you didn't convert.
I love a good cup of coffee, and I'll go around to many different coffee shops and try them to see if the next one is better than the previous one. So I'm definitely a coffee versus tea.
Okay, are you a morning person or a night owl?
Probably more morning, but it does depend, and especially in this industry, you've got to do a bit of both to make sure that you meet the demands and expectations, but more morning.
And you've got fairly young kids, so you've had those unwelcome night owl experiences.
Absolutely.
Last question: if you weren't a CA or in the corporate finance world, what would you be doing?
Graham, I did think briefly, and this was in my younger years of taking up golf professionally. So I still really enjoy my golf and welcome a round of golf from anyone or with anyone. But I got quite
Anyone listening,
competitive.
that's an invitation to invite you to their four ball.
There we go. I did take it quite seriously, and I did consider doing that. I think ultimately made the right decision. I'm very happy where I am now, but seeing the top professional athletes, the likes of Rory and co, it seems like a very glamorous life, and I think it is. So if I had to do something different, it would probably be that.
Never too late to start, James.
I'll continue practicing.
Listen, as we wrap up, I mean, it's been an absolute pleasure having you on the show. I think it's been a really cool conversation, and I think there's a lot of nuggets and learnings in here. But I want to leave you with one final thought, and for any young professional listening in, let's call it a 23-year-old version of yourself, walking into a corporate finance or valuation world, what piece of advice would you leave them with?
Single biggest piece of advice would be to be a sponge, and not a sponge in the sense of leeching off of other people, but whenever somebody is listening, you must make sure that you listen. You learn the most when you're listening and not when you are talking as an
Mm,
individual. And often you will interact with and engage with people that are more experienced than you. So just being able to listen and process and think a little bit more as to why they've said that in
mm.
a certain way or why they've done that, that will really significantly enhance your knowledge base and your ability to engage with people going forward. So be a sponge and just listen and retain all of those pearls of wisdom that you will hear along the way.
I love that. Sometimes juniors, you feel like you need to say something, but you've got two ears and one mouth for a reason. So
Exactly.
you use them
Exactly.
wisely. Yeah. So James, again, thank you so much just for being so generous with your time and your thoughts and your stories. I'm sure we could probably fill another two podcasts just diving deeper in that, and hopefully one day we have you back on the show. For our listeners, if you want to find out more about PSG Capital, go to www.psgcapital.com, or you can connect with James on LinkedIn. So thanks for joining us, and until next time, goodbye.
Thank you, Graham. Cheers
Thanks,
all.
James.